How much money would you make if you invested $10,000 into something like QQQ? Well, today we are going to find out. Welcome to the channel, guys. My name is Spencer, and I talk all about investing. And QQQ is something that I bought today. So the market has been all over the place, falling over and over and over again, it seems. And so I'm buying. I like to do that when the market's red, and I actually have never owned QQQ. I invest primarily in other growth ETFs, but I figured it's time on these lows to buy in and see how it performs against the other positions in my portfolio. So we're going to look at a bunch of things. We're going to calculate exactly how much you'd make for 10, 20, 30 years of holding QQQ to see if it's actually worth it. We're also going to see the dividend history because it does pay a very small dividend, and check that drip calculator, which is a key factor in how I invest. But first, we need to know more about QQQ. So that's what we're going to jump into. If you guys like investing, particularly with ETFs, dividends, even growth stocks as well, don't forget to like the video and to subscribe because you're in the right place, and we are building a community of investors, which I really, really appreciate. So with all that being said, let's roll the intro. As you guys can see, it's after hours, but at the time of filming, we are down almost 6% today, which is absolutely crazy. Such a bad drop. Over the last month, we're down about 10%. If we go to the last year, we're still positive by 2%, but we've erased all of our gains since early 2024. This thing was up 22%, and since then has fallen 16.5%. But the real beauty with QQQ is the more we zoom out, the prettier it gets. Last 5 years, up 146%, and all-time 750%, almost 751. Absolutely wild, but there's something I bet you didn't know that they portray on their website that I think we need to talk about. We are going to jump into their fact sheet, but look at this. 443% more returns than the S&P 500. Now, if you guys know how I invest, I typically buy the S&P 500. It's one of my favorites. I've been averaging in over a long period of time. I did buy more on this market drop again, but maybe I'm putting my money in the wrong place because QQQ, 443% more returns, and that's since launching in 1999. But let's check out their fact sheet to see more of the details. We can see it versus the NASDAQ Composite Index, the Russell 3000. To be honest, at this point, I don't blame you for investing in the Russell. It's higher risk, higher reward, but it just seems to be not as high of a reward as what we've seen. And then we have Invesco. So the NASDAQ 100 index and Invesco are pretty close. Looks like the NASDAQ 100 outcompetes QQQ. So I might need to be putting some money in there as well. You can go through and track all these things. What I love about these ETFs is the data history that we have. You can see all the way back to when they first started trading. They're popular for a reason, and they've stood the test of time for a reason. Don't forget that. Now, I'm not saying buy anything that's old because that's definitely not true, but look at what you are buying. Think about it. Track it, use all the data you have, and then boom. So it looks like they slightly outperformed the NASDAQ 100, like I said, which is what they are based off of. We can see here, Invesco QQQ is an exchange-traded fund based on the NASDAQ 100 index. So it looks like it tracks it so closely because, again, it's holding everything in there. And under most circumstances, it consists of all the stocks in the index. Very interesting. You can go through, track the NAV, track all this. We see the 30-day SEC yield is about 0.54%. Very low dividend yield. Kind of like SCHG, which is another really popular one that I just put a video out that I'll link at the end of this one for those that are interested, but definitely similar, which I don't mind. I like having a lot of availability for these funds, seeing what you can get, trying different things, seeing how they compare, of course. So all in all, it looks really solid. We can slide down here and see mostly in the U.S., a little bit in China and Brazil. Woo woo, my fiance is Brazilian. And then we have, it's big in tech. It's the NASDAQ 100. It's big in tech, pretty big in consumer discretionary. Then we get into the lower areas of healthcare, industrials, telecommunications, yada, yada, yada. So honestly, I'm a big tech fan. If you don't know me specifically, I love buying all the newest tech. I love having it. And this is a lot broader than that than saying purchasable tech. But I think tech in the long run will do really, really well. I also like seeing how they have their platform, how everything's weighted. So you see Apple, Nvidia, Microsoft, Amazon, Broadcom, Tesla, Meta, Alphabet, and Costco. A lot of these are in the Magnificent 7 ETFs that have performed really, really well, especially recently, which I definitely like to see. We can see, I want to check in on this, not a deposit, not FDIC insured, not guaranteed the bank may not lose value. Interesting. Probably nothing too crazy there, probably typical boilerplate wording, but something to note, particularly if you're comparing this to another one. I always recommend all the research you can between the two. So pretty good returns. Let's look at the dividends. Although they're probably fairly sporadic, we have to check them out. Starting off rough with a dividend yield rating of D- according to Seeking Alpha. And of course, this is because it's not a dividend ETF, it's growth. But we have a dividend growth rate of a B+, which is up 23.5% over the last, over the last couple of years, it looks like. No, trailing 12 months. So over the last year. And we see the compound annual growth rate. It's good that it's going up, but it's going to take a long time for this to be anywhere near considered a growth, a dividend fund, because, again, it's not the focus. Dividend yield, they have it at 0.63% and an annual payout of $3 per share. It currently trades for $450. So $3 on your $450 investment. This is not a dividend fund by any means, but the dividend, they did pay one special dividend in 2023, and that's typically not typical, I guess I'll say. But we are, you can kind of see them bouncing around. Now, this is all going to change. If you're a typical dividend investor and you're thinking about branching off into growth, the reason these are all over the place, because with a normal dividend stock, you want to see consistent growth with the dividend, but they're really just tracking the NASDAQ 100. So they don't control what dividend paying stocks are in there. So there may be a lot that don't pay a dividend one year. Maybe the ones that fall do pay a dividend. The ones that are replacing them don't. And so thus the dividend yield rises and falls. You can't really count on it to be too consistent, but it's a little bit of an extra bonus. So not too bad. There's a lot to think about when we're looking at all these different growth ETFs, but the key factor, I think, is going to be this drip calculator. Dividendchannel.com, got to give them credit. I love the drip calculator. QQQ is plugged in, and so let's chart our 10K invested. We can see with dividends reinvested, you are averaging a 9.34% return, which is good. It's very good. 10% is what people are trying to average typically, so we're almost there. And your total return of 927%. With dividends not reinvested, you're averaging 8.91%, less than a 0.5% difference, but your total return is vastly different. You're 100% less with DRIP turned off. And for those of you that don't know, DRIP is the dividend reinvestment calculator, meaning not reinvestment calculator, dividend reinvestment, meaning you are pumping your dividends straight back into the fund, buying more whenever they pay out. Now, QQQ does pay out quarterly. I know a lot of dividend-focused investors prefer monthly or even now weekly because those are such a thing, believe it or not. But this is still an absolutely phenomenal return. In the last 26 or so years, your $10,000 would become $102,000 with dividend reinvestment on and $92,600 with dividend reinvestment off. We again are near all-time highs on this chart, but the market pullback has definitely hurt just these last couple of days. With all that being said, I appreciate how well it has performed. It's absolutely crazy. And what we can do, let's actually throw it in here. I'm not sure when SPY started trading, but we can look and let's see the comparison. It's outperformed SPY for sure. So definitely something to note. I do think that this big calculation at the end here is going to be a game changer to see if I buy QQQ over SPY next time I'm looking to buy a nice ETF. So I will say before we start just throwing these numbers out here, the expense ratio that I forgot to mention earlier is 0.2%. It is a little bit higher than what we typically see. Sometimes these get as low as 0.03% to 0.09%. So we are a little bit higher, but I have seen expense ratios in the upwards of 2%. So in general, it's not that terrible. Now, I've plugged everything in for QQQ. We have our dividend yield and then as well as our expected annual share price appreciation. All of this is grabbed from that DRIP calculator. So it's an average since 1999. So if you think that's too high or too low, I'm not going to agree or disagree with you. This is the average. Now, after 1 year, we can see our ending balance is $10,955. We've made $955 in our first year, which is not bad by any means. Only $64 in dividends, but it's not a dividend fund. Now, I will note as well, I'm not factoring in taxes and I'm not factoring in any annual contribution. So this is if you invested $10,000 today and it yielded 0.64% and gained 8.91% over the span of however long we put in the calculation. So after 5 years, we see that the $10,000 is now worth $15,710. We've received only $323 in dividends, but we're still getting a pretty solid return over 5 years of 57%. We're going to keep kicking these numbers up, and I will do a follow-up calculation at the end where we talk about contributing your max amount to your Roth every year, because that's how I like to look at it. But that changes absolutely everything. So 10 years, your 10K is now worth $24,467, $653.91 in dividends over that 10-year period. And this is just going to keep kicking up. It's really going to be very, very important when we get to the end here, how compounding is going to impact this fund. So $10,000 after 20 years gets you $58,500 roughly, and $1,300 in dividends. So I do like to do this little scenario in my head every time that, oh, I'm 25. I'm not 25, but if I was 25 and I invested $10,000 into QQQ and then waited 30 years, how much money would I have at the end? Am I anywhere near retirement? Anything like that? And we probably won't be anywhere near retirement, but we can see the insane amount of returns. A 12, almost 13,000% return. Your 10K is worth $138,000, and you've made $2,000 in just the small dividend yield alone. Now we're going to do the exact same thing, but with maxing out a Roth. So just so you guys know, you can invest $7,000 a year into your Roth IRA, which I know it's going to make a massive difference because we're going to be adding a lot more money to it. But our overall investment versus the money we make is also going to drastically change. So 1 year, we're going to be around the same. We have put another $7,000 in, so it does bump it up to almost $18,000. If we go up to 5 years, the hard part too with the Roth is you might not be able to invest in it long term if you make too much money. I hope to one day have that problem, but I'm nowhere near it currently. After 5 years, with all your investments as well, we can see we're almost to $60,000. We've made $700 on the dividend, and our total return is 28%. Now, we will slide down here, and we'll be able to see the difference in what we put in our portfolio balance as well. And we can also just do the rough numbers, 7,000 times 30, and get that number there. But 10 years in. So 10 years in, when we're maxing out our Roth IRA, we have now hit $132,000. We're getting $2,000 every, total over that 10-year period, $361 in annual dividend income now. And 20 years in, we really start to ramp up absolutely crazily. So we can see almost $423,000, which is wild. Absolutely wild. $6,500 in dividends. So we're not going to retire off of it without pulling money out of the fund, but let's see how 30 years treats us. After 30 years, $1.1 million, and we've received $11,600 in dividends. So same scenario. This time we'll bump it up. Let's say you're 30, you want to retire at 65, so you invest $10,000 into QQQ. It trades the same. You continue adding every year your maxed out contribution. You never make too much money to do it, which would be amazing, but also not amazing, I guess. And let's just see the returns. It jumps all the way up after 5 years, another 7 million. That's insane. Sorry, 740,000. You're almost to 2 million. Absolutely crazy. Your total dollars kicks all the way up. Dividend income's moving up. Portfolio balance is moving up. Absolutely insane. And so you can actually go down, we see the annual contribution, new balance, the amount of shares, dividend shares owned, compound frequency, again, is quarterly, and it just continues to grow and grow and grow. But let's check this out. Let's do the math. If you invested or maxed out absolutely every single year, how much money would that be? If we did $7,000, and we're going to multiply that by 35, so we are investing only $245,000 plus our 10K initially, $255,000 to get $1.74 million. That's pretty impressive to me, and I may have to pick up some more shares of QQQ if the market keeps falling. So I hope you guys enjoyed this video. I know the compounding with these growth ETFs is a lot slower than some of the dividend-focused ETFs like SCHD, but if you're interested in seeing how those ones fared in the exact same challenge, they'll be popping up on your screen very, very soon. Thank you so much for all the support and for watching the video. Let me know any feedback you guys have, as well as the next ETFs you want me to talk about on this channel. Thank you guys so much, and I hope to see you in the next video.